Mrs. Mamoni. Thank you so much for being Amar Baba.
Hi everyone, welcome to my channel. In this video, I am going to discuss and explain in detail how to prepare journal entry for interest on capital logically by applying both the methods. The traditional method, that is the 3 golden rules of accounting, and the modern method. So let's get started. Chalo shuru kara jak. So let's go through the problem. Past journal entries in the books of Mamuni from the following transactions. So Mamuni is the owner or the proprietor of the business. 2022, 1st June, Mamuni started business with cash rupees 6 lakhs. But we'll do the journal in rough first, then I'll do it in fair because I want to make you understand. But first we'll do it in rough by applying the traditional method, that is the 3 golden rules of accounting. Okay? So let's go through the transaction. 1st June, Mamuni started business with cash rupees 6 lakhs. Please remember how to prepare journal entries in accounting. The first step is first read and understand the transaction clearly. What is the second step? The second step is, since we are doing simple journal entry, let us identify the 2 accounts involved in the transaction. So what are the 2 accounts? First one is cash account. And what is the second account? Capital account. Okay, so let's write. First one is cash account. And the second one is capital account. Okay. As we know, cash account is an asset. So cash account comes under real account. And capital account comes under personal account. Okay, now the third step is, in order to find out which account is to be debited or credited, we have to apply the 3 golden rules of accounting, that is the traditional method. So should we debit cash account or should we credit cash account? Or should we debit capital account or should we credit capital account? So in order to find out which account is to be debited and which account is to be credited, we have to apply the traditional method. Okay. Now let's analyze the transaction. Mamuni started business with cash rupees 6 lakhs. So here, when Mamuni started business with cash, she is a giver of cash or capital. So here cash comes into the business and cash comes under real account. And according to the rule of real account, what comes in is debit. So cash account will be debited. Okay. So we'll debit cash. DR means debit. Let me show you the chart of traditional method. See, real account, debit, what comes in. So when Mamuni started business with cash, cash comes into the business. Cash comes under real account. So according to the rule of real account, debit, what comes in. So cash account will be debited. Okay. Now you must be wondering how cash comes into the business. Because when the proprietor or business owner, or in this case Mamuni, is contributing cash as capital into the business, cash goes out from Mamuni. Here you got to understand the accounting principles, that is business entity concept or separate entity concept. Business entity concept states that a business is always considered to be separate from the proprietor or the business owner. Please remember, all the transactions which are recorded in the books of business are from the point of view of the business and not from the point of view of the proprietor or the business owner, or in this case Mamuni. Okay. So if you see cash from the point of view of the business owner, cash goes out from the business. which would be absolutely wrong. So you always got to see from the point of view of the business. So here when Mamuni started business with cash, cash comes into the business. Cash account comes under real account. According to the rule of real account, what comes in is debit. I've shown you the chart. So cash account will be debited. Understood? So please remember, you got to see always cash account from the point of view of the business. By the way, I have made a very special video on business entity concept where I have discussed and explained in detail about business entity concept with examples, its importance, its limitations and its implications. So if you are interested, please check out this video which I have made especially for you people. And please note, if you are still confused which account comes under real account or nominal account or personal account, I have already made a special video where I have listed almost all the examples of real account, nominal account and personal account. So if you are interested, please check out this video too. Now let's analyze the capital account. Here Mamuni is the giver of capital and capital account comes under personal account. And according to the rule of personal account, the giver of the benefit is credit. So capital account should be credited. So capital account should be credited. CR means credit. Let me show you the chart. See, capital account comes under personal account. Here Mamuni is the giver of capital. So capital should be credited. See, according to the rule of personal account, credit, giver of the benefit. So capital account should be credited. Okay. Now what is capital? Capital refers to the financial resources that can be used by business to fund their operations. In other words, capital is the amount that business owner invested in business in the form of assets or cash. Capital is the initial sum which business owners bring into the business. Capital is a form of liability to the business because the business has to pay back the capital to the business owner. Okay? Please remember, every business requires capital for its startup as well as for its sustenance. Capital is important for the day-to-day running of the business and financing its future growth. It is a vital source of financing a business operation. Okay? Now let's go through the second transaction. 30th June. Provide 10% interest on capital. So what is the amount of capital? 6 lakhs. We already know. Okay. What is the amount of interest on capital? 10% on 6 lakhs will be 60,000. 6 lakhs into 10 by 100 will give you 60,000. So what is our job? The first step is to read and understand the transaction clearly. Provide 10% interest on capital, rupees 6 lakhs. Since we are doing simple journal entry, let us identify the two accounts involved in the transaction. So provide 10% interest on capital. One will be interest on capital account. Another will be capital account. Okay. So let's write. So one will be interest on capital account. So one will be interest on capital account and the second one will be capital account. Okay. The first account is interest on capital account and the second account is capital account. Okay. Understood? Now interest on capital account comes under nominal account. Nominal account. Okay. So interest on capital account comes under nominal account and capital account comes under personal account. We already know. Okay. Now should we debit interest on capital account, or should we credit interest on capital account, or should we debit capital account, or should we credit capital account? I've already told you capital account should be credited. So let's see interest on capital account. Let's analyze the transaction. See, interest on capital account is an expense for the business and is added to the capital of the proprietor or the business owner, or in this case Mamuni, thereby increasing the total capital in the business. Since the business owner, that is Mamuni, has started business with the capital rupees 6 lakhs, she is getting 10% interest on capital. So this is an expense for the business. So interest on capital account is an expense for the business and is added to the capital of the proprietor, that is Mamuni, thereby increasing the total capital in the business. Please remember, the question of cash and bank does not arise here because interest on capital is not paid in cash to the proprietor, or in this case Mamuni, or deposited in Mamuni's bank account. Although it will increase Mamuni's total capital investment in the business by 10%, and that is 6 lakhs into 10 by 100, 60,000. So previously she contributed 6 lakhs plus she will get interest on capital 60,000. So her total capital will be 6 lakhs plus 60,000 will give you 6 lakhs 60,000. Understood? Let me explain one more time. Mamuni has contributed 6 lakhs. Mamuni koto capital এনেছে? 6 lakhs. This is the rule. কোনো business owner যদি capital আনে সে একটা interest পাবে. In this case, Mamuni will receive 10% interest on capital. It's almost like a loan. Bank থেকে loan তুমি যদি নাও, bank তোমাকে interest charge করবে. So here also the same case. So business owner is almost giving loan to the business. For that, the business owner is receiving 10% interest on capital. Understood? So from the point of view of Mamuni or the business owner, it is a gain. But from the point of view of the business, it is an expense because the business has to pay interest on capital to the business owner. But the business owner's point of view, it is a gain. It is a capital. So you got to see always from the point of view of the business while doing journal entries. Please remember, while doing interest on capital account, you always got to see interest on capital account from the point of view of the business. Okay? Please remember, the business owner or the proprietor, or in this case Mamuni, invests her hard-earned money with an expectation of not only earning some profits, but Mamuni also hope to get some returns in the form of interest on capital invested by her. So in other words, the business is liable to pay back the capital to the investor, in this case Mamuni, along with the interest on capital. It is similar to obtaining a loan from bank. So interest on capital comes under nominal account, and according to the rule of nominal account, all losses and expenses debit. So interest on capital account will be debited because from the point of view of the business, interest on capital account is an expense for the business because the business has to pay interest on capital to the business owner. Understood? You always got to see from the point of view of the business. Okay? When the business pays interest on capital to the business owner, it is an expense for the business. But from the point of view of the business owner, it is a gain. And please remember, this interest on capital is not paid in cash to the proprietor or deposited in the proprietor's bank account. Although it will increase the proprietor's or the business owner, or in this case Mamuni's total capital investment in the business by interest on capital. আগে কত ছিল 6 lakhs and interest on capital কত 60,000. So our total capital will be 6 lakhs plus 60,000 is equal to 6 lakhs 60,000. And please remember, she will not get this interest on capital in cash or by check. Okay, it will be adjusted later on. Okay, so interest on capital account is an expense from the point of view of the business. Okay, and interest on capital account comes under nominal account, and according to the rule of nominal account, all losses and expenses debit. So nominal account will be debited. So we'll write DR. DR means debit. Let me show you the chart. Nominal account. All losses and expenses debit. Credit all gains and incomes. All losses and expenses debit. That is the reason we have debited interest on capital account, because interest on capital account is an expense. Okay, understood? Now let's analyze capital account. We already know capital account comes under personal account. See, I've already done. So what is the amount in this case? In this case, capital account is equal to 60,000. Why? Interest on capital is a part of his total capital. That is 6 lakhs 60,000. But he has not brought additional capital of 60,000. But he is going to receive 60,000 as interest on capital. But the business will not pay interest on capital in cash to the proprietor rupees 60,000. Rather, it will increase the proprietor's total capital investment by interest on capital. So the additional capital is 60,000. So this 60,000 is a part of the total capital 6 lakhs 60,000. Understood? Since capital account comes under personal account, and according to the rule of the personal account, the giver of the benefit is credit. So we'll write credit, CR. CR means credit. So let me show you the chart. See, credit, giver of the benefit, and that is what we have done. So in the first transaction, cash account is debit and capital account is credit. And in the second transaction, interest on capital account is debit and capital account is credit. So we have done this by applying the traditional method of 3 golden rules of accounting. Now let's do this in fair. I've done it in rough work to make you understand. Now let's do it in fair. This is the format of journal. Okay. On top you got to write in the books of the proprietor, in this case Mamoni. Then you got to write journal entries. The first column is for date. The date of the transaction is entered in this column. Okay. And the second column is for particulars. Each transaction affects 2 accounts, out of which one account is debited and the other account is credited. The name of the account is written first and the word DR, that is debit, is also written towards the end of the column. Okay. And in the second line, the name of the account is to be credited is written. The credit account starts with the word to. Okay. And the third column is for LF. LF means ledger folio, or the page number of the ledger account, where the posting has been made from the journal, is recorded in the LF column of the journal. Okay, this one LF. This is the fourth column, debit column, or the amount column. In the fourth column, the amount of the account being debited is written here. Okay. And the last column, credit column, here the amount of the account being credited is written here. Understood? Now after every journal entry, you got to write narration. Narration means brief explanation of the transactions. Okay. And after every journal entry, you got to draw line from here to here. Understood? And then in the end, you got to add up the total of the debit column and the total of the credit column. And the total of the debit column should always be equal to the total of the credit column. Understood? Now let's see the rough work. See, 2022, 1st June, cash account is debit and capital account is credit. So let's write in fair. So we'll write 2022 June 1st cash account debit, and then you write here towards the column dear. Dear means debit. And leave a little space here, then you write 2. 2 means credit to capital account. Okay. In the first line, you go to write cash account, and in the second line, you go to write to capital account. যেই অ্যাকাউন্টটা ডেবিট হবে সেটা ফার্স্ট লাইনে লিখতে হবে, যেই অ্যাকাউন্টটা ক্রেডিট হবে সেটা সেকেন্ড লাইনে লিখতে হবে, আর ক্রেডিট অ্যাকাউন্টের আগে অলওয়েজ 2 লিখতে হবে। 2 means credit, that is the reason আমাদের এখানে CR লিখতে হবে না। Let me show you again. See, cash account is debit, capital account is credit. Understood? I did it in rough to make you understand. Now let me write narration. Being, always start with being. তুমি being লিখতে পারো or now লিখতে পারো, but I'll write being cash brought in, being cash brought in by Mamuni as capital. Always start the narration with being. তুমি ইচ্ছে হলে being লিখতেও পারো, নাও লিখতে পারো, this is not compulsory. Okay, being cash brought in by Mamuni as capital. Now what is the amount? Let me see the transaction. Now see, 1st June Mamuni started business with cash 6 lakhs. So the amount is 6 lakhs. So let's write. First we'll write here for debit account 6 lakhs, and for the credit amount we'll write here. First we'll write for the debit account 6 lakhs in the debit column, and for the credit account, that is capital account, we'll write 6 lakhs in the credit column. Understood? Cash account এর জন্য, that is debit account, you go to write in the debit column 6 lakhs, and for the credit account, that is capital account, you got to write the amount in the credit column. Understood? And after every journal entry, you got to write the narration and you got to draw a line. Understood? Now let's go through the second transaction. Now see the second transaction. 30th June. Interest on capital account debit, capital account credit. Okay? Let's write it in fair. 30th June. Interest on capital account debit, interest on capital account debit to, leave a little space and write to capital account credit. Okay, let me show you again. 30th June, interest on capital account debit, capital account credit. That is what we have done. So 30th June, interest on capital account debit to capital account credit. Now what is the one? Let me see the transaction. See, 30th June provide 10% interest on capital account. That is 6 lakhs into 10 by 100 will give you 60,000. Understood? So we'll calculate here. We got to show here 6 lakhs into 10 by 100. 6 lakhs is the capital. 10 by 100, that is 60,000. Interest on capital account 60,000. You should be writing 60,000 in the debit column for the debit account, and to capital account you should be writing in the credit column 60,000. Understood? You got to show the calculation. 6 lakhs into 10 by 100 being interest charged on capital or being interest provided on capital, as you wish. You got to write the narration always, otherwise marks will be deducted. Okay, being interest charged on capital. Understood? And always narration should be in bracket. Now let's do the total. Let's do the debit column first. 6 lakhs plus 60,000 will give you 6 lakhs 60,000. Now let's go through the credit column. 6 lakhs plus 60,000 will give you 6 lakhs 60,000. And I have already told you the total of debit column should be equal to the total of credit column. So your journal entry is complete. Now let me make you understand by applying the modern method with the same problem. Okay? Now see the modern method. Modern rules of accounting. Types of accounts. Number 1, drawings. Number 2, expense. Number 3, asset. Number 4, liability. Number 5, capital. Number 6, revenue. Increase, decrease. See number 1, drawings. If drawings is increasing, it should be debit. Okay? And if drawings is decreasing, it should be credit. See, decrease. If expense is increasing, it should be debit. If expense is decreasing, it should be credit. If asset is increasing, it should be debit. If asset is decreasing, it should be credit. See, তিনটেই এক. Drawings, expense and asset তিনটেই এক. যখন তিনটেই increase করছে, debit, debit, debit. আর যখন তিনটেই decrease করছে, drawings, expense, asset তিনটেই credit হচ্ছে. Understood? So, this will be easy to remember. Please remember, if drawings, expense and asset accounts are increasing, then these three accounts will be debit. If drawings, expense and asset accounts are decreasing, then these three accounts will be credited. Credit, credit, credit. Similarly, number 4, if liability is increasing, it should be credit. If liability is decreasing, it should be debit. Number 5, if capital is increasing, it should be credit. If capital is decreasing, it should be debit. Number 6, revenue. If revenue is increasing, it should be credit. If revenue is decreasing, it should be debit. This is the increase column, this is the decrease column, and this is the types of accounts. The first three accounts are similar. If these three accounts are increasing, they should be debited. If these three accounts are decreasing, they should be credited. And the last three accounts are also similar. If the last three accounts are increasing, they should be credited. And if the last three accounts are decreasing, they should be debited. This is the modern rules of accounting or modern method. Understood? Now let's do the problem by applying the modern method. Okay? I've already solved the problem by applying the traditional method. Now let's solve the problem by applying the modern method. So I'll do it in rough first to make you understand. So the first transaction, I'll be applying this modern method with the same problem. 2022 1st June, Mamuni started business with cash rupees 6 lakhs. So what are the two accounts? We already know, cash account and capital account. So let me do it in rough first. Cash account and capital account. Okay? Cash account is an asset. So we'll write here asset account. Okay? Now let's see the modern method chart. If asset is increasing, it should be debited. Okay? So here, when Mamuni started business with cash rupees 6 lakhs, from the point of view of the business, cash comes into the business. So cash comes in or cash is increasing. Cash comes under asset account. According to the modern method, if asset account is increasing, it should be debited. Because cash is increasing. When cash comes into the business, cash is increasing. Understood? Let me show you again. See, number 3, asset account. If asset account is increasing, it should be debit. Understood? Now see capital account. Here, Mamuni is the giver of capital rupees 6 lakhs. So capital is also increasing. So let me see the modern method chart. See, number 5. If capital account is increasing, it should be credit. This is the increase column. If capital account is increasing, it should be credit. So let's write credit. So capital account is also increasing because Mamuni started business with rupees 6 lakhs. So Mamuni is the giver of 6 lakhs. So 6 lakhs is coming into the business. So Mamuni is the giver of capital. So capital account is also increasing by rupees 6 lakhs. So if capital account is increasing, according to the rule of modern method, it should be credited. Understood? It should be credited. Okay, let me show you again. See, if capital account is increasing, it should be credit. So the first transaction is complete. Cash account debit, capital account credit. देखो same जिनिस ही होलो. See, by applying the traditional method, cash account is debit, capital account is credit. See, by applying the modern method also, cash account is debit, capital account is credit. So whichever method you apply, the answer will be same. Cash account is debit, capital account is credit by applying the modern method. By applying the traditional method also, cash account is debit, capital account is credit. Whichever method you apply, the answer will be same. Okay, now let's do the second transaction by applying the modern method. So let's go through the second transaction. On 30th June, provide 10% interest on capital rupees 6 lakhs. So we already know the two accounts. One will be interest on capital account and another will be capital account. Okay, so let's write. On 30th June, interest on capital account. And another will be capital account. Okay. Now, here, when the business is paying interest on capital to Mamuni or the proprietor, this is an expense for the business. I have already explained in detail. So, interest on capital account is an expense. Okay. So, let's go through the modern method chart. See, number 2. If expense is increasing, it should be debit. So, interest on capital account is an expense for the business. So, expense is increasing. So, it should be debit. See again. See the chart. Number 2. If expense is increasing, it should be debit. Understood? Now, capital account. Let's go through the chart again. See number 5. Capital. If capital is increasing, it should be credit. Okay. So, interest on capital rupees 60,000 is being added to Mamuni's capital account. So, rupees 60,000 is a part of total capital of Mamuni. So, capital account is increasing by rupees 60,000. So, Mamuni's capital is increasing by rupees 60,000. So, let's see the modern method chart again. Number 5. If capital is increasing, it should be credit. Okay? It should be credit. Understood? Now, let me show you the rough work by traditional method. See, interest on capital account debit, capital account credit by applying the traditional method. Now, let me see by applying the modern method. Interest on capital account debit and capital account credit. So, the answer will be same whether you apply the modern method or the traditional method, the answer will be same. So, I have shown you how to apply logically the traditional method, that is the 3 golden rules of accounting, and how to apply the modern method. I hope you understood and everything is clear now. So, I have shown you how to apply both the methods, that is the traditional method and the modern method, while doing journal entries. And I hope you understood and everything is clear now. Thank you so much for watching. Thank you so much for your precious time. I sincerely hope this was helpful. I'll catch you all again in the next video. Till then, keep rising and keep shining. Bye-bye. Take care, stay safe and stay blessed always.